Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York on Thursday, January 7th, 2016, and this is the Daily Report for Gold and Silver. We do have COMEX Gold closed up strongly. We'll talk about that in a second. Forex Gold, of course, is still trading. It has a little while before the afternoon break, so to speak. Gold is currently trading up about $18 on the day, trading at 1109.60 with a low of 91.10 and a high of 1110, call it. It's 1109.90 on the day. Tremendous move as we see the equities markets under tremendous pressure. Oil continuing to plummet, but really this is a safe haven play as we go into the first part of 2016, with the equities markets performing the worst that they have at the beginning of the year since 2008. So that is absolutely alarming. We'll take a look at oil, we'll take a look at gold, we'll take a look at the equities markets, all on today's Daily Report. So traders, first to the business of gold. If you recall from yesterday's show, although I did not send out an official trade alert on yesterday's report, I did put out a recommendation for those that wanted to be long the market to enter a long gold trade at the market and place a stop strategically under 1080. Now, the market was currently trading at that point. This is yesterday's candle right here, but the market was trading roughly at 1090. The high on the day was about 1093. So traders taking that call all got in roughly at about 1091, 1092. Stops are at 1080. Market is now well above 1100, which was our next point. For all those that did not take that call, we'll send it out as an official trade alert because the move above 1080, as I said yesterday, was absolutely significant, but I absolutely wasn't convinced as much as I am today with this move above 1100. For those that took the call yesterday and actually placed stops at 1080, you can now go ahead and raise your stop to just below 1100, thereby protecting us, the equity within the trade, as well as a small amount of the profits that are in the trade. For those that did not take the call, you can enter at the market currently trading roughly at 1107, and your stop is going to be under 1100, call it 1097. Now, we've got some key levels that we want to look at. And one of the most important things when we take a look at this market is some of the recent lows before we hit this high at 1191, which came in roughly mid-October. But then back in September, we had these lows that were tracking just at around 1100. I'm going to try to extend the arrow. And as you can see, these lows that came in right down here came in roughly at 1100. So the fact that we have now closed above that and closed above it pretty substantially, to me, is a very, very strong indication that we could see gold continue to move. Now, precipitating factor, of course, is an utter meltdown in our equities markets, but that all started in China, and China is where they had a massive devaluation of their currency. So you've got a huge influx into a safe haven investment, and gold, which kind of fell out of favor, has now fallen back into favor, which is quite interesting. The other market that we really want to talk about and look at is going to be crude oil, that falling to levels that we have not seen since really 2008. We're very, very close to that number of 32 and change. We'll take a look at a chart of oil in just 1 second. So traders, as I said, I do want to take a look at an oil chart. But before we do that, I do want to take a quick look at the same daily chart, but in Japanese average format, or the Henkin Ashi chart. This represents today's candle. That's this candle right here. Extremely long body size. Of course, we had a protracted move, and it measures the open as the midpoint of the prior candle. At no point did it trade to or at or below the price, the midpoint of yesterday, and it's been that way now for the third consecutive day. Very, very strong. Absolutely just barreled through this 1080 in terms of the resistance area. Now on the Henkin Ashi, because of the way it captures and gives us a high and a low, an open and a close, because it's really affected by the midpoint, as you can see, 1100 on the Japanese average chart. But as I said, we are trading right now roughly at 1107. So traders, as I said, for those that took the long call in gold yesterday, I am recommending that we trail our stops up. For those that didn't, I am sending out a specific trade or official trade alert, I should say, to recommend the initiation of a long position in gold. Dow Jones Industrial Average, 20 minutes still left in trading as we look at the trade time here at 10:37. Currently off about 376 points, the low 463, current is 532. So we have traded off over 400 points on the day. But as I talked about, really the big mover here, the big thing that we absolutely want to watch has got to be crude oil, because crude oil has just been in a tailspin. We looked at this chart yesterday, and what we talked about on this chart was the fact that it hasn't really been since 2008, 2009, that's this series of lows right in here, in which we saw the market actually break 33 per barrel and trade to 32.98. Now, take a look at the marketplace today. We have actually exceeded that on a low. In terms of our current is the lowest it's been since 2008, because when we take a look at these lows that came in 2008, most of them were lows. This again is a weekly chart. So most of these lows are intra-week lows rather than being closing lows, which to me is significant. That's not what we're seeing right now. In fact, what we're seeing right now is on a closing basis, we have the lowest close that we have seen since 2008. We probably have to go back even further. We'll explore that tomorrow. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. And what a first week of trading in 2016 we've seen. Talk to you tomorrow. Bye-bye.